Hey guys, welcome to the midweek update. And let's look at what happened so far this week. Yesterday's drop was big. We went overshot below 410, went as low as 407. But then we got back above the April mid-range. We tested it once, made it a support, went even higher, then tested that weekly range I've been following, then went up again. Now we're testing the mid-range of the mid-range again and bouncing again. All at the same time with VIX going higher, market green, VIX green. Sort of to be expected because we have the FOMC later today, but this is a bullish setup. And it's a bullish setup because VIX has a lot of room to fall, making lower highs here and not really breaking out, not closing above any meaningful level. Same for VIVIX. We had this consolidation here that got rejected back in the range. Trying again today, but most likely will get rejected by end of day. And why I'm a bit bullish is expecting the VIX crush, and IWM looks very good for a bounce. Like this is the current range, and I'll put this one as 4 as well, and this is the overshoot range. And we have this big pretty large bullish divergence here, both on this low and this low, and both short term, like this low here from last Wednesday and the low from yesterday. So both are showing a bullish divergence, and we are at the range lows with potential for overshoot as low as 163, but doesn't seem likely that it will happen unless JPOW does something scary. And the potential here is to go as high as this 196. Don't know if it will happen yet. It depends on the reaction and what comes later in the week with economic data, with unemployment and NFP. But so far, the economic data today was quite bullish. Let's do 2-star. So services PMI came in very high. We had the ADP employment change, which was a huge bit, like 2x speed. And if we look at the trend, it's starting to go up again. This is private payrolls, and it's not pointing towards the jobs market rolling over yet. We will get final confirmation on Friday with unemployment and NFP. Yesterday, JOLTS was under expectations, but not really that low under expectation. So it's still looking like we're not getting that jobs market rollover. We had raw oil cratering. I don't know what this is about, honestly. But from the graphs, it's looking quite bullish, specifically because IWM and the expectation that we'll get a VIX crush after the FOMC announcement. So VIX might go today. VIX might end up like plus 15, plus 20, or minus 10, minus 15. We don't know which one yet, but I think it's like 70-30 towards VIX getting crushed later today and going back to the 15s, which would allow the market to go to 420 or even higher. We will see. Yeah. So to conclude, it's about the jobs market. The data doesn't show that the jobs market is rolling over. If the jobs market is not rolling over, the market will continue to be resilient because it needs actual proof. The way you should look at this is, let's turn everything off. So the Fed announced that they're going to start hiking here. They started hiking and inflation went crazy, increasing expectations of hikes. Then the market was expecting for the jobs market to roll over, but the jobs market didn't roll over. Economic data was strong along and is still strong today. So the market assumed that the economy will tank, and the economy didn't tank. And then the market started pricing in the economy not tanking, and this part here is the economy not tanking. daily. So that part here is the economy not tanking. So the market got burned on this part here by believing the economy will tank, and that didn't happen. So the next time uh, for the market to roll over again, it needs proof that the economy will tank. The only proof that this will happen is the jobs market rolling over. Until the jobs market rolls over, it will not tank. But on the other side, the economy being strong means the inflation will stay relatively high, that the Fed will keep hiking more to cool the economy and cool the jobs market, and that rates will stay higher for longer. With all these three being true, it's inevitable that at some point the jobs market will roll over. Because the market knows that both that the economy is strong and that because the economy is strong, at some point the Fed will break the jobs market, it cannot go up either. So it's stuck in this balance between basically every news is bad news for the market. If the economy is strong, it's bad news because the Fed will keep hiking. If the economy is bad, it's bad because the economy is bad, and if the economy is bad, the market will be bad as well. So right now we're stuck in this range with no reason to go up, no reason to go down. Expect this to continue until we get data points that invalidate this, and most likely that will invalidate it by the jobs market rolling over and making the market also roll over. That's it. More on the weekend video. Have a good day. Bye bye.